welcome back. Hope you enjoyed your short break. We're making a switch to English now for our next presentation. It's a pleasure to introduce you, our next presenter. I think he's an absolute genius. Welcome, Professor Marcello La Rosa.
Thank you, Henrik. Thank you for the invite. It's a pleasure to be here. I've just shared my screen. So I would like to talk a bit about process mining. I am an academic in the area of process mining, and before that, I've been working for about 15 years in the area of business process management. And recently, we have founded Apromore, a company that is committed to commercializing process mining software that directly derives from the results of our own research in process mining. And together with GBTEC, we have joined forces and we have forked a version of Apromore that goes under the name of Big Process Mining by Apromore, which has been embedded in the Big platform to offer process mining capabilities to big users. So I would like to tell you a bit about process mining, where it comes from, what we can achieve, and also close with a little case study that would show you what we can achieve in practice concretely with process mining in the context of a very specific organization. But let's start with a quick survey. So there are a couple of questions that I would like to ask you. First of all, if you are already familiar with process mining, have you already tried process mining in your organization? And second, if not, have you ever considered, or are you considering applying process mining in your company? So Natalie will help us with a quick poll here on Zoom. So there should be a pop-up window where you can quickly answer these questions, and then we can take a look at the results. All right, let's share the results. So basically, 83% of you have not yet used process mining within your organization, but about 40% have already thought or considered using process mining. Okay, let's say that this is a good starting point. So let me put process mining in context. And I guess most, if not all of you, are familiar with process mining initiative, process modeling initiatives are already running, process modeling within your own organization. So let's see what is the relationship between process mining and one of its antecedents, process modeling, because process modeling has been around much earlier and much longer than process mining, which is still an emerging technology. So the starting point for process mining is often the stark contrast that exists between reality on the one hand and the way we imagine reality. So in our own expectations, specifically about our own organization's operations. And this is definitely reflected in our business processes and in the way we represent these processes, indeed, by means of process models. So on the one hand, here we see an example of a process, the way we might have modeled it. It is a simple example of a process for handling a repair request. It could be at a manufacturing company. It could even be IT service desk. Let's imagine a simple process for handling repair requests. However, the model that we see on the right is the actual business process, captures the actual business process. And what we can see is that in reality, things might actually be much more complex than the way we have pictured these things in the form of process models. We might have more activities than what we represented in our process model. We might have rework, repetitions, infrequent paths, bottlenecks, and so on and so forth. So there are at least a couple of reasons why this is the case. First, as we know, as we've experienced every day, exceptions are everywhere. Think of a specific customer, a discontinued product, a particular path on the process. The question is, do we represent all the possible exceptions of our process when we create the corresponding process model. Often we tend to simplify reality by disregarding exceptions, especially those that are less frequent. Otherwise, these models may become too complex to use as a starting point for analysis and process improvement. And the second reason, as we are experiencing these days with COVID, is that the context in which our processes operate tend to continuously change. We saw it a couple of years ago with the new GDPR regulation, after which all our operations had to be modified in order to offer our customers the ability to provide and revoke consents for treating their personal information. And these days we're seeing that with COVID, all of our operations had to be modified in order to handle this emergency situation. So do we actually model all these continuous changes that our operations undergo when it comes to representing our processes in the form of process models? Often the answer to this second question is also no. We do not have the resources. We do not have the time to model all the possible exceptions and continuous changes that our processes undergo. So what happens is that on the one hand, we embark into very large scale process modeling initiatives that lead to enormous investments. Yet there is a risk of creating collections of dead process models, because these process models may get out of sync from reality. In the case study that I will illustrate later, which is within an insurance company here in Australia, when we approached this organization, they were managing a collection of over 4,000 process models to handle all the different products and brands within their insurance sector. However, out of these 4,000 process models, they could only afford to keep only a handful of these models, a few dozen models, in sync, up to date with reality. So the consequence of this is that over time, the value of our modeling initiatives may be compromised. So, and this is the specific context in which process mining was born. The idea is, can we do anything to automatically help organizations create these process models and keep them in sync with reality? And the whole paradigm shift that process mining is preaching is from a confidence-based business process management, where these models are created out of the confidence of the employees and other process stakeholders that we interview or engage in workshops or we observe in the process of discovering this process model. So a shift from confidence-based business process management to evidence-based BPM, where the evidence comes straight from the transactional data that is automatically recorded by the enterprise systems that are used to support the execution of these very processes. So how do we go about process mining? How does it work? In a nutshell, basically, every activity that we perform as part of a process, whether that is checking an order, approving an invoice, assessing a claim, so long as that activity is supported by an enterprise system, like an ERP system, like ProAlpha or SAP, or CRM system, like Salesforce or Dynamics, or an industry-specific system, like a claim management system in an insurance company, no matter what the system is, this system will leave a trace of that activity. What was done, when the activity completed, possibly also when the activity started, who did that activity, what was the business object being manipulated, the purchase request, the order, the claim. So this digital footprint is the starting point for process mining. A process mining tool like big process mining by a promoter would automatically tap into one or more source systems. extract the data, this digital footprint, consolidate them in what we call event log, and then use it as input to extract models of the underlying business processes and a range of other process analytics. So let's take a quick look at what type of analytics we can extract with process mining. So we can start either from historical data, say the last 6 months worth of orders, or the last 12 months worth of claim transactions that have been recorded in our claim management system. Or we could even tap into live streams of data as cases of a given process unfold. For example, as we handle claims or as we fulfill orders, we can tap into this data and use them as input to a range of process mining algorithms. And the idea is to extract what we call actionable process knowledge. There is a deep understanding of how our business process works. And this knowledge itself, it's actionable because whenever we find issues such as bottlenecks, non-compliance problems, we can use this as a starting point to undertake remedial actions in order to fix these issues. And this actionable process knowledge may take different forms. And first and foremost, what we can extract automatically is indeed a process model through a set of techniques that go under the name of automated process discovery. So what you see here on the slide is the actual process model of that repair example. And the nice thing about process mining, without looking into the details, is that we are actually breathing life to these models, because we are enhancing the models with a range of statistics that allow us to understand what is the main path, what we call the sunny day scenario, the one represented by the activities that are darker in color because they have a higher frequency, a higher number of cases in which these activities have been observed. So a large number of repair requests in this particular example. And the thicker arcs that represent the transitions from one activity to the activity that has been observed being performed immediately next within the same process case, so for the same repair request. So we can quickly distinguish, without looking into the details, the sunny day scenario, which is what we would typically tend to represent, often by means of a simple sequence, in the process model that we create by hand, right? We can distinguish that from all the exceptions that are less frequent, so they are represented by activities that are of a lighter color, so they have been observed in a lower number of cases. And these thin arcs that represents those infrequent transitions between activities. Not only we can distinguish the main path from the exceptions, but we can also identify rework and repetition, ping-pong effects like the one between activity inform user and test repair, which we may have not necessarily modeled if we had created this process model by hand. And at any point in time with big process mining, you can actually dynamically switch from a low-level graph, which is the process map that you see here on the slide, to an actual BPMN model, like the one that you would obtain in big design. So you've got gateways of type XOR and NOR that allow you to precisely identify order relationships between activities. For example, you have two activities, repair simple and repair complex, that mutually exclude each other. Or other activities like inform user and test repair that can actually happen in any order. So they have been modeled with an end split. And the nice thing is that all these gateways are actually automatically discovered by the tool. So we don't have to worry about that. We can obtain the assist process model in a snap. And also the tool allows us to switch dynamically perspective. Instead of using boxes to represent activities, so essentially, instead of having an activity-centric process model, we can move into a resource-centric process model where the boxes represent the resources, the human beings or the systems, the applications that are involved in the execution of the various activities. So what you see here is the social network of interactions between the various resources that are involved in the same repair example. So you can find overutilized resources versus underutilized resources, and resources that constitute a bottleneck versus resources that work most efficiently. And depending on the type of information that is available in your event log, this might be your resources, this might be your roles, this might be the life cycle of your business objects like orders or claims. The possibilities are endless. They are just limited by the richness of your data set. And automated process discovery is just one category of process mining techniques. Another one goes under the name of performance mining. In fact, we do not only record transactions in this system, but we also have the timestamp when activities were completed and possibly also when they started. Now, by using the timestamp information, we can change the statistics overlay on top of our process map or BPMN model. Instead of showing the number of cases in which activities have been performed, we can actually show the average duration or any other statistics around duration, minimum, maximum, total, median duration, right? And the coloring of the activities and the transitions, so the arcs, will change accordingly. So an activity that is darker in color will indicate a bottleneck, meaning an activity that typically takes longer than the average duration of the other activities to be performed. Likewise, a thicker arc will represent a waiting time or a resource capacity bottleneck, meaning a situation in which cases clog up at the doorstep of an activity waiting for a resource to become available to perform that activity. So waiting time. And so waiting west in lean terminology. And the same overlay can actually be used on top of the BPMN model. And there's a range of statistics and so analytics that we can extract. So we may overlay the statistics on top of our models, or we may automatically generate a performance dashboard where we can create custom charts, tables, and statistics styles to visualize and monitor different key performance indicators. For example, volumes of sales, or demand forecast, or the distribution of activities, or the distribution of resources, in order to pinpoint highly frequent versus highly infrequent activities, and likewise overutilized versus underutilized resources. Again, here the opportunities are unlimited. They are actually only bounded by the richness of the data set and by our own imagination. And we can go on. Another capability goes under the name of conformance checking. And here, techniques for conformance checking allow us to study and automatically find differences between the actual process, the one that is automatically reverse engineered from our logs, with respect to the model process. So say that we actually have a BPMN model of our repair process, right? So we import that into the tool, we select a corresponding event log, and the tool will automatically identify all the differences. And these differences are not only on a structural level, meaning showing us activities or paths that exist in the actual process, but are not contemplated by the model process, the one that we build by hand. Or this could even be a to-be model that prescribes a future situation, the way we would like our process to be after we have applied our improvements. So we can identify differences on a structural level, and we can also identify differences on a performance level. For example, the expectation is that repair requests are handled within an 8-hour time frame, but in reality, we've seen that it takes 18 hours with peaks of up to 3 days, right? So not only we can extract structural differences, but also performance differences, and basically compare the actual process with the target, right? To see how close or how far we are from our performance expectations. And finally, another core capability of process mining goes under the name of variant analysis. And here the idea is not to compare the actual process with a model one, but rather to segregate different variants of the same business process, starting from our data set. For example, we might use a logical driver, like the type of repair in our example. And that would allow us to separate simple repairs and extract a model, a process model out of that, from complex repairs, and then again extract a process model out of that. Or alternatively, we might look at a performance driver and segregate cases that are completed within the service level agreement of, say, 3 days versus cases that take more than 3 days. And again, discover a process model out of these two. So once you've identified your 2 or more variants, then you can automatically compare them using a feature that is similar to the one that we showed before when comparing the actual with the model process for conformance checking. So basically, you can identify differences that can help you understand why certain cases behave the way we behave. Like in our example, we can see that complex claims have some structural differences that distinguish them from simple claims. They have a different type of repair activity that is being performed, and they also have a restart repair that is often requested. So, for example, if this is slow and fast cases, you may find that there are bottlenecks in the slow cases that are not available, that do not occur in the fast cases. And these are basically pointing to the root causes for this problem. So why certain cases take longer than 3 days to be performed. By knowing the root causes, then you know how to inform your improvement initiative in order to remove those issues, in order to remove those bottlenecks, those ping-pong effects. And of course, you can also create dashboards to compare your variance from an aggregate statistical viewpoint. So for example, here you can see 2 dashboards that show the distribution of a resource frequency between the simple variant and the complex one. So you see that the type of resources that are involved in the complex cases are different than those that are involved in the simple cases. So basically here, the point that I want to make is that with variant analysis, you can slice and dice your data set using filters in different ways, and then create process models out of each of these slices of your log, and then use these techniques to automatically contrast the variants and identify differences, either on a structural level using process models, or on a performance level using statistic overlays on your process models, as well as dashboards. And again, there are different analytics that you can extract. I'm just showing you the main ones. One thing, one specific type of variant analysis is what we call change analysis. And this is something that we've been using often these days to help organizations understand how they are operating during COVID. And the idea is to learn from the different operation model in order to inform the future operation model after the lockdown. This is an example that we extracted from an organization here in Australia that we supported during and after the first lockdown. And now here in Melbourne, we are under the second lockdown, but we had a brief period where restrictions were eased, and that was around June, July. So what we did is that we identified variants temporally. The way we sliced the data set was actually determined by some key milestones in the COVID emergency period. Before COVID, so the first milestone was when the first lockdown was started, So that is a process model that we extracted to capture the modus operandi, so the operations model during the lockdown. And then the second milestone was at the completion at the end of the first lockdown, so after. And basically the idea is to try and learn from the model during the lockdown, where operations were forced to change and some constraints had to be lifted, some tolerance levels had to be raised in order to be more flexible. So the question that we help this organization answer, which is specifically focused on facilitating agility, is what can we learn from an emergency situation that we can replicate past the emergency? So basically, what can we learn from this model here in the middle that we changed since before, from the time before the lockdown, that we can now implement in the model after? So to recap, we've seen we really scratched the surface, but I showed you some example analytics that we can extract for automated discovery, performance mining, conformance checking, variant analysis, and then change analysis. Now, all these techniques can be used for different use cases. And first and foremost, as you would intuitively get, with process mining, we can achieve transparency. We can use techniques from automated process discovery to automatically reverse engineer the as-is process model and basically get a good and in-depth understanding of how our operations work. So we achieve transparency. But transparency itself is an enabler to achieve other values. So it's an enabler for other use cases. One is that of improving efficiency and productivity. For that, we will combine techniques from automated process discovery with techniques from performance mining. So we can use performance mining techniques to identify bottlenecks, rework, repetition, over-processing waste, waste. So basically different types of waste that constitute impediments to our productivity, that slow down our operational efficiency. On the opposite of the spectrum, we can use process mining techniques and specifically variant analysis technique to profile different customer experiences. You know, the simple cases versus the complex one, the fast versus the slow, and so use this to enhance quality of our products and services as well as customer experience. On the other hand, we can use techniques from conformance checking, both based on models as well as based on business rules, such as violation of a 4I principle, to monitor our exposure to risk and to non-compliance issues. So we can use process mining for monitoring risk and compliance. And finally, we can use techniques from change analysis to facilitate agility, as in the example of COVID. Now, process mining has been used, while it is still an emerging technology, it has been used in a variety of industry domains. Most commonly, we've observed process mining being used in the financial sector. So banks, insurance company, private funding, and superannuation companies. Then, another domain where we've commonly seen process mining being used is the healthcare domain, where we basically use process mining techniques to reconstruct the patient flow within a given ward or in the emergency room. And then telcos, public administration, technology companies, and then various industrial that in these slides have been grouped under this term industrials, and that includes manufacturing and engineering companies. So as you can see from this slide, process mining per se is domain agnostic, like process modeling. And all you need to start with process mining is a data set that has certain process information that will allow you to reverse engineer your process model. So the entry bar is actually not high at all. Right. So I would like to close off my seminar and then open the floor to questions with a quick case study. This is an insurance company we worked with a few years back here in Australia. Suncorp is a large insurance group. It also offers banking services and wealth management services. This case study was done in the commercial insurance area within Suncorp. And this chart that you see here on the slide is basically a plot of performance of 130,000 commercial claims. On the x-axis, you see the complexity of the claim. And to simplify, let's assume that the company has a threshold, this vertical line, that allows them to distinguish simple claims, those claims that are below a given amount, say your work laptop that breaks down, from complex claims. So those claims whose premium is very high, for example, an entire commercial warehouse that burns down. On the y-axis, you have the duration of the claims, and each of these dots indeed represent a claim of a given type, simple or complex, that was completed within a given time frame. Again, for simplicity, let's assume that there is a threshold represented by this horizontal line that indicates the SLA, let's say 5 days. So those cases that are completed within 5 days are called fast. Those that take longer than 5 days are slow. And what you see here with this blue oblique line is the expected performance distribution. So basically, the company had an expectation that the duration for handling a claim would grow linearly with the complexity of the claim itself. However, as you can quickly see from the distribution of these dots in our chart, there's hardly any correlation with this oblique line. So on the one hand, if on the one hand we had some complex cases that took longer than 5 days to be completed, that is fine because they are complex. And on the other hand, we have a large number of simple claims that were completed within 5 days, and a few outliers, a handful of complex claims that actually took less than 5 days to be completed. You see that the problem is in the top left quadrant. The great majority of claims are simple, yet it took more than 5 days to complete them. So this was a huge performance issue for Suncorp. It led to SLA violations, and consequently, it led to the company being fined by the regulator in Australia. Of course, without mentioning the numerous customer complaints that they had received. So the objective of the executive manager of commercial claims at Suncorp was to push down all those claims that are here in the top left quadrants. Those are simple claims, and they shouldn't take any longer than 5 days to be completed. So the specific set of techniques that we used at Suncorp were variant analysis techniques. So what we did is that we segregated the simple data from the complex one. And for the time being, we parked away the complex data. We focused on the simple claims, and we further subdivided the log into 2 slices, simple and fast versus simple and slow. So basically, we focus on the 2 left quadrants here on the chart. And then what we did is that from each slides of the log, we extracted a corresponding process model. The one for simple and quick claims versus the one for simple and slow claims. And what you see here is just an ABC style example. It's not the actual model that we extracted from the company. But this is just to make the point that then we used variant analysis techniques. We contrasted this model, and we identified a couple of reworks and repetitions that constituted bottlenecks in the slow cases that did not occur in the fast ones. Once we identify these differences, we back them up with a statistical analysis of the repetitions. And this, again, is automatically done by the tool. So claims handling is a typical example of application to approval process. That is a process that goes through a number of stages: opening, investigation, assessment of the claim, offering, and closing. What we did is that we did this repetition analysis in each stage of this process, and we found out that in certain stages, like in the assessment stage, certain activities like follow-up with claimant were performed up to 12 times in the slow cases, as opposed to only being done once in the fast cases. Clearly, this was the source of these differences were the source of the slowdowns, because these activities were repeated a large number of times and often as part of a rework loop between two or more activities. So what we did is then we animated the log that we extracted from Suncorp. And in this animation, what we did is that we actually replayed the historical data that we extracted out of this log. And we replayed that on top of the process model that we extracted from this log. And this is actually the process model that we reverse engineered, not from the simple claims only, but from the entire log, including both simple and complex claims. This is because we wanted to make the point that the problem was actually with the simple claims before showing what the root cause for this problem was. So what we do here is that this is not simulation. We are actually replaying history, like you see with VAR in soccer, where you can replay an action, or what you can see in the tennis, right? In a tennis match where you can replay the action. That's basically what we are doing. We are fast forwarding the replay of history. So we show these results to the executive manager, who help us interpret this. And what she figured out is that there were essentially two problems. One was that the triage of the claim was not done properly, meaning that often the claim was channeled to the wrong type of claim, and then the claim handler would realize later down the track that some information was missing, so they would have to follow up back with the claimant, with the customer. And that, of course, damaged the customer experience because led to a large number of touch points with the customer, which is never great, right? And the second problem was that there was an actual pinpoint effect between different claim handlers. And this pinpoint effect was due to the fact that the way the individual bonuses were set for each claim handler was different than the KPIs set for the executive manager at the process level. At the individual level, each claim handler would get a bonus at the end of the financial year based on an overall number of claims they had worked on, but not necessarily completed. And that was the problem. On the other end, our executive manager would get the bonus at the end of the year if the number of claims processed within and compliant with the SLA, so within 5 days, if they were simple claims, was above a given threshold, say at least 95% of simple claims completed within 5 days. So the problem was that the claim handler did not have any incentive to complete the handling of a claim as quickly as possible. So they were bouncing back claims. So they would just do a bit of work and then push it back into the queue. Then some other claim handler would pick up on that claim, do a little bit of work, and push it back onto the queue. So the nice thing of this case study is that we could actually follow the company throughout their BPM journey, which started with process mining. But process mining is always the beginning, it's never the end. Process mining can allow us to take informed decisions as to what improvements to undertake, to implement in order to rectify the problems that have emerged through our process mining exercise. So what the executive manager did was to set up a one-stop shop application that would automatically enforce the claim handlers to reach a milestone in the processing of the claim, so from one stage to the other, before being able to put the claim back into the queue. So basically, she was nothing else than implementing the straight-through processing of lean, right? The second is that they improved the triaging. And finally, they obtained further efficiency improvement in terms of cost saving by outsourcing overseas the handling of the simple claims, because these are high volume, low value claims. And the company was quite nice to actually disclose some of the benefits that they obtained from this exercise. The most important one is that they dropped the handling speed from 1 to 2 months for simple claims down to a maximum of 5 days with a record of 7 hours. If you lodge a simple claims early in the morning, chances are very high that it will be completed by 5 p.m. Then they also reduce resource utilization by 30%, and such resources could be reallocated to the complex claims. They improve the sale of non-vehicle premiums, so commercial claims, and then a number of customer success indicators, such as Net Promoter Score or customer satisfaction, improved systematically over a long period of time. So all the analytics that I showed in this introductory seminar are actually taken from our own tool, Big Process Mining by Apromore. And as I mentioned at the beginning, the key differentiating factor of our process mining solution is that they directly derive from our own research experience. The way we do variant analysis or predictive monitoring or change analysis, or even the ability to discover BPMN models and annotate them with different statistics are quite unique, the way we do it, to big process mining. So it's leading edge. It is also enterprise grade. We have trialed and tested it in a large number of domains, ranging from finance through to utilities, tertiary education, healthcare, manufacturing, engineering, IT service desk, really a large number of domains. The core of big process mining by Apromore is the Apromore core itself, which is open source. So that is a synonym of transparency, open architecture, and the ability to see how actually the tool works from the inside. And then it also comes with a unique capacity-based pricing, which poses no limits on the number of users or types of processes or data models that you can import. And it allows you to grow incrementally, starting very small, and as you gain a higher level of maturity in your process mining practice, as you link it more systematically with other BPM initiatives like process modeling or process automation. In fact, process mining can often be used as an approach to identify opportunities to automate your processes, both at the entire process level by means of a BPM system, as well as down at the level of individual tasks, e.g. by using an RPA, a robotic process automation solution. So this capacity-based pricing has a very low entry bar that allows you to start small and grow over time as you gain maturity. All right, that's it for my seminar. Sorry if I've gone a little over time, and I'll be very happy to take any questions you might have. And then, of course, I would remit you to my GBTEC colleagues if you want to know more about the tool or have a demo of big process mining.
Okay, well, Marcello, thank you first of all for this absolute phenomenal presentation. Really interesting for me as well. Every time I hear it, it's absolutely great. So some questions came up in the chat. One or two were already answered. Thank you, Torsten, for that. But there's one question still pending. And Marcello, I think you showed us already some of the advantages of big process mining by Apromore. Here in Germany, a lot of people know the company Celonis, which is also in this emerging market of process mining. Can you tell us a little bit about the differences and also the advantages of big process mining?
Absolutely. So the main differentiating factor of big process mining is leading edge, as I mentioned before. So if you take Celonis, it comes from a different experience. So basically, almost every algorithm that has been implemented in a Promore derives from significant scientific studies. Take, for example, the automated discovery of BPMN models. That is based on an algorithm that goes under the name of split miner and is the result of a PhD thesis that obtained the best paper award at our premium conference, the BPM conference that is actually going on these days. So there have been hundreds of publications, thousands of citations, and each algorithm has been benchmarked against the state of the art. For the case of split miner, out of the benchmark, it resulted that it is the most accurate and the most efficient. You can discover very accurate BPMN model in a snap. And on top of that, you do not only export these BPMN models, you can import them in Big Design, there is full integration there, but you can actually overlay statistics, as I showed before in my slide. So you can, again, breathe life into these BPMN models, do filtering, abstraction, duration, frequency overlay, as opposed to just extracting a drawing that you can use in your modeling tool. And this is just an example. Other examples involve techniques for variant analysis, conformance checking, predictive monitoring, and clearly the roadmap of big process mining is directly coming from our own advancements in research. So we have a very dense roadmap based on the latest insights that we obtain from our own research.